Dipen Sheth, Head of Institutional Research with HDFC Securities, joins us. Dipen, good morning and thank you for joining us. Let's take the clock back. A month ago, everyone was buying into high beta stocks, mid-cap stocks as if there is no tomorrow. Now, the same guys are selling the stocks down as if this is end of the world.
So, this is classic extreme behavior at both ends of the emotion curve, if you can call it that, Nikunj. I don't think the world is in any danger of collapsing and that Indian markets are going to go for a toss, nor do I feel that we will have a one-way run-up. And this is how markets behave in the short term, and it's pointless. I've said this earlier on your show, and it's pointless trying to predict short-term movements. That said, I would say that it is very clear by now that we're close to about 3 months of this new government or dispensation, call it what you will. And it is, there is more gradualism than revolutionary or eager actions visible so far.
That is disappointing.
And to my mind, from a market man's perspective, that could be a little disappointing. Let's understand that governments do not exist to please markets or market men.
Yes.
There's a country to run. It's a big, messy elephant of a country out there, and it's going to take a while to get things under a fix. We can do a little bit of nitpicking and say this could have been done better, that could have been done better. Yes, and I would suspect that, as we move forward, the pace of reform, the pace of administrative changes, and God knows quite a few have already happened so far. It's not that nothing has happened. It's just that you and I might have aspired for a little more. So maybe this will change a little bit. We have an event coming up over the weekend, which is the 15th of August, and that offers an opportunity to make interesting noises and change gears, as it were. Will it happen or not?
Enough noises. I mean, it's not like the market has not had its dose of noises. And I think you're not expecting any concrete announcement in an Independence Day speech. He's going to be making...
So there's going to be a little bit of bluster, I guess, a little bit of positioning and posturing. Maybe specific announcements may take a while to come, but the way forward will be made a little clearer. The job of a leader, I suspect, is not so much to, of course, the back office always does the nitty-gritties and the nuts and bolts, but the direction setting, I guess we are getting one more opportunity now to re-establish and reaffirm the broader direction that the government policy mix will take from here on.
If nothing comes tomorrow, do you think on Monday we could see a sell-off?
So I've been saying one shouldn't predict the short term, and yes, you might see a little bit of a sell-off, but I don't think this big thing of the India story playing out over the next 2, 3, 4, 5 years is going to be materially impacted. But if after a while, let's say if after 6 months or a year, if this kind of disappointment persists, then we are in for a little bit of trouble. So you saw, the betas run up, the PSU banks, the L&Ts and so on, and there's been a sharp pullback from there. So that's short-term emotion playing out in the markets. And the sluggish macros are not helping. So you had, CPI coming back with not a vengeance, but at least the food inflation number there, the subcomponent there, the core is at 7.4, food inflation is at 9. The monsoon has recovered, but maybe not quite enough. Again, inflation and hence the impact on interest rates as you would expect RBI to drive. So that part isn't in any hurry to mend, And then, of course, globally, despite your claims that crude is at a one-year low, I think what the market is looking at is not the current price of crude, but what can happen in case there's a flare-up somewhere. And there are 3 or 4 hotspots out there, whether it's Ukraine, whether it's Iraq, whether it's Libya, whether it's Gaza. It's always been there.
But you think about it, that crude is not flaring up despite these hotspots. That just tells you the demand for crude is going down.
So that's a constructive way of looking at it. But in case something were to happen, the kettle is on the boil, by the way. It's not that... things are kind of where they were a year ago. Surely there is more tension in the Middle East than there was a year ago. Which is why, given the monsoon, the global risk factors, interest rates, inflation and so on, your currency has also kind of come down to about 61 odd, which is 4-5% off the levels you saw after the Modi reset.
But you're betting on PSU revival. Is that your big theme?
So, the beta trade or the risk on trade has waned, and people are, as you can hear from the noises on your channel also a while ago, people are looking at defensives and secular. So IT, pharma, FMCG, all that is coming back a little bit into traders' screens for now. I think this provides an opportunity. if you want to really take a serious, deep call on where India can go in the next few years, this is the time to lighten up on the defensives, not get out of them. They are wonderful businesses, don't get me wrong here. I'm not saying you should be out of defensives, but surely the case for doing a deep down study of, cyclicals and selectively, yes. And then if you are looking for possible themes, I would say PSU revival, purely based on the kind of government that we have in place right now, is a theme that is worth chasing. Now, will every PSU revive? Will every sector of where PSUs are present in a variety of sectors in India, and there's a spectrum of players. So, for example, in banking, you have completely stressed out banks like a UCO or a Dena Bank or or a syndicate, and up there to State Bank, which has got very decent capital adequacy, doesn't need to raise money right away, which is getting a good fix on asset quality, no risk of margins waning in the short term. So it's not that you just go out and do a top-down look and buy whatever's there in the space. But yes, I think the administration, policy mix, and the quality of management and broad direction setting by the government at PSUs should improve over the next 4 or 5 years. In fact, the last 5 years, the second term of the UPA was characterized by mismanagement and misbehavior with the PSU pack. So I think that's one part which can come back. And then there are PSUs which are sitting on dollops of money. Coal India doesn't need to look for money to do capex and drive up
cash rich balance sheet.
Yes, absolutely. So or a Concor for that matter, which is very much a theme which is going to play out if railways capex is stepped up. So I don't think there is a uniform story at PSUs.
So SBI, Concor, and some would have
so let's say Coal India,
they are your top
and
ideas.
ONGC. I mean, I don't know if you noticed in the last quarterly numbers which came out just yesterday, that they've got the highest rupee realization per barrel of oil that they've sold in the last few years. They are some 2,700. They were at about 2,600 for God knows how long. Yeah, and the thing is that ONGC is actually a cash cow that the government keeps milking. And if that milking were to even come down by a few percentage points, the expansion in profits would be dramatic.
But the star this week is HDFC, and what explains such a strong and powerful underlying price action in HDFC, which otherwise is a very large cap institutional dominated stock?
Statutorily, I am forbidden to make any comments on this.
Even on HDFC Limited?
So it's part of our group, and I just can't make a comment here. So you will have to forgive me.
Okay, let's talk about Infosys.
Okay.
That one also has made a comeback, and it has also made a decent comeback. What has done the trick for that stock? Bargain buying, change of guard?
So, I think Infosys was going through a period of, internal struggle and turmoil, and as it came to grips with what I call a generational change in leadership.
Okay.
So, over a period of time, the last 2 or 3 years, gradually saw the old generation fading away, and then somebody like Mr. Murthy came in from the old generation, steadied the ship, got in a new generation leader like Mr. Sikka, and kind of put the house in order. Did he do it in the best possible way or not? There'll be a dime a dozen opinions on it. But by and large, I think the ship has been steadied now. It's a fantastic business. It's got lots of cash on the balance sheet. It's got probably the best or close to the best name that one can think of in terms of, brand salience in Indian IT. The US is on the verge of a multi-year sustained economic recovery. What can go wrong with Infosys from here? Valuations are not compelling.
High attrition rate.
So the attrition rate is about 18, 19, 20% or so. Right. So you're telling me all that was wrong with Infosys, and I'm trying to tell you all that can go right for it. Okay. So this is the story to buy into, if you ask me. Does it mean I don't like TCS? Of course not. Does it mean I don't like HCL Tech? Of course not. Or Wipro for that matter. So Wipro is a little bit like Infosys in terms of, it was kind of dragging and losing its mojo for a while. And it's kind of trying to get it back. There is strong evidence that Infosys has kind of put the house in order. Now will they go out and score a ton?
Is there a new inflection point for Infosys? Is this a new inflection point?
So the inflection point happened when the worst of the sentiment was there, and you could see that the cures were, being put into place. So 3,000 is when the inflection has probably happened. Okay. If you will allow me the luxury of hindsight, I don't think there's much that can go wrong unless they shoot themselves in the foot from here on. I think this is a fantastic multi-year story, and this is the kind of story that you don't get in large caps so easily. And at a time when we are all looking at the betas, here is a secular defensive which is up for grabs at 14, 15x or something. I don't see how you can lose money in Infosys from here, unless, like I said, operationally and at the business level, they shoot themselves in the foot. So nothing seems to be in their favor for the last 12 months or so. So a lot of these things will get into favor. And in a year from now, if some smart rookie comes and tells you that everything is in their favor, then maybe you should give me some credit for it. So that's the bet one has to place. You never know what's going to happen in the future, but it's worth taking that bet right now. It was terribly worth it at 3,000, but there's still enough money on the table.
Nikunj is great with that. He knows everybody's calls right to the T, so I'm sure.
No, I mean, he's been bullish on Infosys. Yeah. I remember when we've interacted in the past, you've been bullish on Infosys.
Right. So it's not that we've been blind to the problems that have happened in the company, and God knows they've had more than their share of problems, even as companies like TCL and HCL Tech stole a march over them. Yeah. So, but I think it's time for these guys to come out of the woods.
I just wanted to, just on ONGC, Nikunj, we just had Mr. A.K. Banerjee talk about the divestment issue, talk about how they believe that, ONGC could get a better price if the fuel subsidy mechanism and the gas pricing issues resolved before, divestment hits the market. And I asked him about a better price, but he was obviously not going to, put a number to that. What do you think would be a good price for if the company was to go ahead with divestment, resolving these issues?
So divestment means the supply of 2, 5, 6, 10% of stock into the market. Or some such number. I don't know what the exact
5% is what they're claiming. Yeah.
So by itself, that is by definition, that is a reason to be soft on the stock, in terms of not get excited about it. But that's a technical factor. Look at the business. You had this, like I just told you a while ago. You've had this company which had the mandate to secure or to make India at least close to self-sufficient in oil 20, 30 years ago, which took production up to beyond 20 million tons per annum, and then has stagnated for the last 10 years, even as the economy has doubled, tripled or whatever. So it's clearly, lost its way somewhere, and yet is churning out these profits year after year after year. So you know what kind of assets it is sitting on. It's flogging Bombay High to death now, and I still suspect it's a fantastic field and you'll get years and years of production, but more capex will be required and so on. Now the problem with ONGC was that they were being denied a fair price for their output. So realizations are south of $45 at last count, whereas crude is selling for 103 in the global market. So maybe they shouldn't get 103 because these are not fields that they've bidded for. But 50, 55, 60. But of course, and how much can that swing profits for them? You'll be surprised. So if you tell me, again, this comes back to my PSU revival theme, that if the government does the right things and behaves itself with respect to ONGC, lets the management have a free hand in building out the business, bid overseas for assets, develop Indian fields,
so if you're saying it's
and doesn't get in the way.
Yeah, if it's sub fair value right now, then what is the fair value is what I'm trying to ask you.
It's a function of how much the government is willing to give them a leash to run their own affairs. And it's government arithmetic that is going to determine final value for ONGC. But I know that this is lower than fair value, for sure.
Let me just mark some pharma stocks here. Lupin has added another 9 rupees, Sun Pharma trading above 800 rupees, and large cap pharma companies once again have delivered. Dipen, pharma is a crowded trade. Pharma has been a crowded trade, but the kind of numbers which we're getting from a Sun or a Dr. Reddy or a Lupin, these are blowout set of numbers. Margins in excess of 30%, return on equity in excess of 25%. Do you think these stocks still have a long way to go?
Unfortunately, yes, in the sense that if you are the beta hunter types, you would be tempted to go strongly underweight on guys like this.
Does it make sense to hunt for beta when good quality is growing at 15-20%?
Yeah, so Sun, we all kind of tried to put together if not a sell thesis, at least a go easy thesis on Sun when Taro came out with slightly weak numbers, and look at the pullback since then. So there is the rest of the US business which is doing remarkably well, 40% plus kind of margins. What kind of businesses are these? So the reason for this is that like software, like IT services, this is a sector where believe it or not, India can actually beat the rest of the world. And like software, this is a sector where the government, despite its rotten ways over the years, is able to do precious little to harm the sector.
Yeah.
So these two are sectors which have done well despite government influence.
They're efficient.
They're efficient. They're good. We are good at this stuff, and it's not going to go away in a hurry. So there are still many, and look at the fact that we are useful to the rest of the world, particularly the United States and the Western countries, in terms of the cost structures under which we deliver these profits. So we might make 40% EBITDA margin in Sun, but Sun still delivers cheaper than a whole lot of generic players in the US. So, and this is going to stay there for a while. And like I said, with the US in the cusp of a recovery and the recognition that healthcare costs have to be managed and brought lower, I think there's many, many years of growth left for Sun and Lupin and Reddy and so on.
So let's say 7,700, if you have to construct a portfolio, and the shelf life of that portfolio could be about 12 months to 18 months, what would you like to buy into that portfolio? What would be your top 5 ideas in that portfolio?
So we run a model portfolio, and we haven't fiddled with it for the last 3 months after the new government came in, hoping that, our beta tilt would play out. So it has a beta tilt, it's not just betas. So do we have Infosys? Yes, we have an overweight position. Do we have L&T? Yes, we have a strong overweight position in L&T. Do we have an SBI? But of course. Do we have an ICICI Bank? Strong overweight again. Amongst the mid caps in the financial space, we've thrown in a Federal Bank for good measure. I also suspect that, so it's easy to name stocks from my model, or ONGC for that matter. We put Bharti Infratel because we saw it as a cash engine. At a very good cash yield, and we made terrific money there. So now I think it's time for a little bit of a change, and I think we might have to take some money off the table selectively. So that happens in portfolios. I think the themes to now chase would probably be not just the secular or domestic, the defensives such as infra or FMC, as IT software, IT services, FMCG or pharma and so on. But I think we will also now have to look selectively for new themes such as, one, there is going to be a great boost to infra creation by this government. That's a given. So you can't but be overweight on the obvious proxy, which is L&T, and maybe you don't like their last numbers and what's happening in their hydrocarbon business and the losses there and so on. But you can't but be positive on an L&T given this situation. Then selectively some capital goods companies which are poised to gain from capex in railways and roads and EPC, pure play EPC companies, for example. Yes, you were saying.
No, I just wanted to get 2 ideas there. You're of course liking Orient Cement,
yes.
And you're also liking Texmaco.
So these are 2 stocks which obviously fall into the mid-cap category. Cement to us is a domestic cyclical. You can't import cement and harm manufacturers in India, unlike what you can do with steel or zinc manufacturers, let's say. In cement, what has happened is that for a number of years, one part of the country has been suffering from overcapacity, which is the southern part of the country, even as demand has picked up in the north and prices have stayed high there. And if this infra build-out were to happen, then you would see, and it has already played out in the south, you've seen prices going up dramatically. Will they stay there or not? The jury is out on that. But I think if you look at a 2, 3, 5 year perspective, cement is a commodity where there is tightness. And hence prices will remain high, and which is why you see stocks at 10x EV EBITDA and higher on F16 basis, and you say, heck, this is a commodity, why am I paying this kind of valuations? So the front lines at least. And then you have the Orient Cements of the world, which is sitting on a 5 million ton capacity now and is adding 3 with no dilution in equity. Okay, so you're going to get a 60% higher capacity in a situation where demand is unlikely to fall off with no equity dilution. Okay, very well poised, and if the worry is that they're not going to commission their capacities on time, what we understand is that they are looking at a June 15 commissioning, which to my mind was earlier than what I thought. So I don't think there is money to be lost there. I think at last count they are something like about 22,300
but
crores
the demerger,
market cap.
And correct if my numbers are not right, the stock has gone up from 40 to about 110.
So when the demerger happened was when cement was, or at least mid-cap cement was not in fancy. We've been making noises since the 50 and 60 levels that this is a stock worth watching. We took the management around to meet investors on a roadshow, and we got uniformly good vibes from almost everyone we met. And if you were just to get 60% higher capacity for free, for no more dilution in your equity, that itself was the reason for the stock to run up from 60 levels to, let's say, 100, 110 or wherever. We are at 117 now today. So I still think there is meat left in this one, for the simple reason that the effect of the new capacity getting commissioned and the cash flows coming in from there and then retiring, I think at peak they should have about 1,200 crores of debt. So at 3,500 crores EV, 2,300 crores market cap today, and 3,500 crores EV, you will still be able to pay down debt with your accruals and drive market cap over the next few years. And the assurance on that comes from our confidence on cement prices.
Do you have a price?
So they are in a region where they can supply. So if the southern markets take off, they are bang in the middle of the Andhra Maharashtra border, and so they can supply to MP, they can supply to Maharashtra, they can supply to Andhra.
It's a local regional player, and in cement it's the regional players which matter. Appreciate your time. This time it's a long weekend. Enjoy your weekend, and thank you for joining us.